Good morning, traders. We are broadcasting live from freedomtradingclub.com. This is Coach Alex. We took a scalp long. We've been short after the report, CPI and all that. So we're trying to trail right now. Take that long scalp. Anybody take that long scalp trade? Try to take like about 17 ticks profit and then trail your stop. We have a little less than 5 minutes until the open. Again, the trend is still up. So we don't mind shorting, but you want to short into a good rally. Remember, the market is up until it goes down. Right now, the momentum is down, right? Momentum is down. Volatility is 157. Trend is up. If we break below 33,929, we should see a significant sell off. All right. But he's still light long here. Light long. Are there any questions before we get started for the 9:30 opening in 3 minutes? We know the volatility number, right? Volatility is 157, right? Is everyone able to hear me so far? Good. Again, those who are long, just trail your stops. Those who are long, trail your stops. If it rallies, we will look to short it. Now, the other thing, newer traders, we want you to stay away for the first 6 minutes, right? First 6 minutes. Let's see if the market tests the 110 level, 34, 110, where the earlier resistance was, okay? Today's pivot is 33,956. 33,956. Know what that is? We're open for business. Again, this 996 would be a volatility move down, right? If you get to 996, it's a volatility move down from the high. There's your target. Now go flat. Those are larger accounts. Go flat. The rest of you wait for a rally in 6 minutes. Okay? How many got the 996? Yeah, Grandma was shooting for 157 points from the high, Paul. Does everybody know where the high is? All right, the high right there is 34 153. Does everybody see 34 153? All right, 34 153. Let's subtract minus how many points? 157. So you want to target 33 996, which we just hit. And if you're still short, those larger accounts stay short. Smaller accounts wait for the rally toward the first touch rule and do it again. All right? Everybody got that? Has everybody got the plan? Has everybody got the plan? 34, 33 996 was your target, right? How did I get 96? Again, who wants to go through that? How did I get the target of 33 996? Right. We got the high. Does everybody know where the high is? High of 34, right? The high, good job, D Shep. 34 153. So that's how the big boys target is down there. That's what grandma was doing. I hope you joined it. Now, the newer, smaller accounts, we want you to wait for at least a first touch rule or up here. The ideal 34067 would be a great place to short it. Okay? Those who have larger accounts, stay short. Stay short and let it fall. Let the market fall and continue to stay short. Bigger accounts, wait for the rally and wait for 6 minutes. Okay? Everybody got it? Got the plan? Everybody should be nice and green today, right? From that first short of the report of 34110. Well, yeah, you didn't know what the trade was. You should not be trading, Sharon, until, yeah, see, the two people who have not taken the course are red. There's my proof. If you do not take the course, you will be red. You will have no idea what you're doing, and you will be red. You'll think you know, but you won't know. You won't know to wait for the market to make a move and then take the counter trend. You will not know how to do that. You can hear it and practice it, but you won't know it. And you won't see these These are the two areas that you should be shorting and covering. And also, Sharon, right? You would have had no idea about 996, right? Because you wouldn't know what to do with it. And you wouldn't have the confidence to stay short until you got to 996. That's the proof. The bigger accounts so far are still short and they're trailing their stops. The smaller accounts are waiting for rallies and then shorting the breakdown. Okay? Very stochastics and the breakdown. Everybody else is green. So we've got 82 people green, two are red. What does that tell you? Well, not only that, um, what you did was you go short on a sell stop on a narrow contract, the micro minis, instead of waiting for it to go down and then coming back up to where you should have shorted. All right. So that's what we want you to avoid doing that. Bigger accounts, stay with it. Bigger accounts, stay with it, please. Flat right now, waiting for a little rally to reshort. Yep. And at least wait for um, an overbought stochastic on the 133. Let it get to 80. We definitely have a downtrend now, guys, because we're below the daily pivot. And that's usually where profit taking comes in. Everybody see it here? Profit taking will come in, and those who are shorting the lows might get trapped. So the idea is to take your profits and now wait for a pop back up. Be patient. And Sharon, what I was pointing to earlier, when the market was going up and we had our sell stop, if you remember, at 34,110, right? Now, here's the problem with sell stops after a report. What's the big problem of a sell stop after the report? Anyone want to know? Anyone care to know? Slippage. Write this term down. Slippage. What does that mean? Everybody's got a sell stop. So you might have a sell stop. Now, how can you prevent that? You know how you can prevent that? You put a sell stop limit. That means you have to get 34110 where you don't trade it. Little trick that professionals know, amateurs don't. Sell stop limit, right? We'll teach you about that during your course. That's how you enter a trade. Or you let it go down and then sell limit when it comes back up. And that's what these guys are doing. The place where it breaks down is the area you want to short. So when the market comes back down, now you're short with a limit order and you just ride it down for the rest of the day. And it approaches it here and you take another short. And your target is 996, right? How do you get 996? That is the volatility number. All right? And that's how you get green. But you got to know this. You got to approach the market as a professional, not just clicking away. All right? Everybody got their ideas now down? You want to wait for a rally and then short when the market turns. And you notice it's back above that pivot again. How come? Why is it above the pivot? This is all profit taking, right? Profit taking down by the pivot. It's a natural place to take profits. So, how much? So, if you put in a limit order, but market keeps going up, so no trade, right? No, you'll get your trade then. You want it to keep going up to hit the place where you should have gone short. So, if it's 110, that's where you should go in. So, right now, what I would do is I would pick a spot where you think the market will fade out against and put a sell limit order. And when the market turns, you go short. It should hit 929 because that's our downside target today, right? Right? It should hit 929. So does everybody see this entry right here? Overbought stochastic, right? Overbought stochastic. Market goes and hooks down on the JTHMA. That's a short. You take your first target here. Your next target is what, guys? What is your next target? Somebody tell me my next target. 929. Yeah. You should be able to get at least 30 points profit on this trade. Now, where's your stop? Your trailing stop is right by the reversal point here, right? Your trailing stop would be 996, correct? 996 stop. 929 target. and then walk away. And then you walk away. So if you've been short for a long while, just stay with your trade. I was waiting for another entry. Wait for overbought stochastic. Market breaks down. Take a new short. Those who are already short, just keep holding. Right here comes our overbought market. Right, see it? It's going to come up above 80. Right. Everybody see that? The green stochastic versus the red. So wait until it starts back down below the JTHMA. All right. By the way, if you want to sell limit, you could lower it from. I said put a sell limit at 64. I think you can lower it to like 34,017. If you don't get that, if you don't get it, start shorting now. Right? Start shorting now. And where's your target going to be? Final target. You take one off plus 12. You scale out. Your final target would be 929. If you reshorted, your next target would be about 47. So take some off at like 947, 937, and 929. Okay, here's your 47 target. Everybody getting a 47 target? See if we get a 37 target. And then see if you have more than one, obviously shoot for a 929 final target. Okay. Anybody have one left at least? One contract left. Anybody? Okay. Just keep trailing. You shouldn't be trading anyway. I'm telling you. Good. I'm glad you're green, but that's just going to encourage you to. All right. Hey, I like to see you make money, but I'd like to see a better trade for yourself. What if I died tomorrow and you didn't know about who's going to call 929 if I'm dead? You got to learn to do this yourself. And I want to teach you how to do it yourself. More important, we want to see that discipline, guys. The discipline, just as if you were trading. You know what, Lactic? If you pretend you're trading someone else's money, then you don't care. Then you're just like, hey, market's going up, I'm going to go long. Market's going down, I'm going to go short, and I don't care. Hey, if I take a 30-point stop, I don't care. It's not my money. You're just then trading the market, not your equity. Does everybody understand the difference? When you trade scared money, then you're not looking at charts, you're not looking at targets, stops, or anything. You're just looking at that red and green. 2 out of 3. We're actually theoretically the trend is neutral right now, right? Because we're at the pivot. All right, it's down now because we're below the pivot, right? Nice job, Lactic. That was a good one. Yeah, it was a good entry. And again, let's see if we can get this for bigger traders, for grandma traders. Let's see if we can get 929. See how close we get to that. Now, it may go through it. May go, if you have like 10 contracts left, take 5 of them off at 929 and trail it. I mean, you don't have to get out here. Here you go. Order filled. I'm flat because I ran out of contracts. Order. I'm flat because I don't have any contracts left. Who got 929? Who got 929? Our target this morning that we gave you at 8 o'clock in the morning, Eastern Time. That's how you trade this stuff. Anybody still in there trailing? I ran out of contracts. Anybody still trailing? Randy? All right, good. Nice job. I'm flat. I'll probably regret it. You know how many times I get out and how many times you get out and the market keeps going. But here's the difference. If you get 5 ticks and the market goes down 157 ticks, you need remedial training. You need to come here for a week and be forced to stay with these trades. But on this last one, I made 72 points. So even though I got out at obviously not the lowest low, I still made 72 points on the trade. Jeremy, did you still in there or I should have failed it. Yeah, me too. All right, go walk away. That's what we said last night. We were talking about this. Mark, good job. You make your money, guys. You hit your target. And like Coach Jeremy said, I'm not in this to prove anything. You get your target, your business plan, and you go on and do other stuff. Good job, Randy. Anyone else still in there? Might as well. Yeah, you should be done for the day. Because you know what'll happen. How many of you start off green? Remember lactic, right? The other day, you started off nice and green, and then what happened? Gave it back. And we don't want to give it back. That's the whole thing. I'd rather miss out on this nice winner, which it is, than try for a few more ticks and then all of a sudden seeing it going up above the pivot and stopping me out. Remember, you can always come back at 2 o'clock and trade. Everyone at least gets some of these sell signals. One or two of the. Is there anyone who missed all of the sell signals? Done for morning. I like that. Because there's a quick way of entering, and again, I'll share it's not a secret. First of all, you start off using the bigger charts, right? You start off using the bigger time frames, right? The bigger time frames give the bigger picture. But that doesn't that's your strategic plan. That's not how you scalp or get into the trade. What you then do is use the next shorter time period is the 1 minute chart. So do you see this, Sharon? Once the market has pointed its direction after that report, PPI, CPI, right? You say, okay, I'm going to what? Short rallies, right? So we are trend traders or momentum traders only in a counter trend scenario. So you can now. Do you see how, Sharon, the bigger traders don't care if they have slippage? So they go short here and they get filled there, and right, they get filled there. The market comes down, and then it comes back up. They really don't care because if they get filled there, and then it goes down, they get filled down. Even if you got filled down here, if you got filled down here at 34,038, it comes back up, they short some more, and now look at the money they're making. So, but our methodology is to wait for a small rally. In other words, the rally should not be as big as the sell off, right? In theoretical terms, it's like this: the market goes down this much, right? That's how much it goes down. It comes back up half of it. That's where the GAN angle and all it got the 50% pullback. So down, up, the next down should be how much? The same as this swing down, right? What do they call this? Anybody? Measured move. Oh, no, no, I don't mean that. I mean, like, how do you know where it's going to go down again? This leg, Bill, right, should be as significant as this leg, right? Retracement, yeah. So the measure you're measuring move. What are you measuring? You're measuring this to this, and after it finishes this, you project how far it's going to go down. It should go down as much as the first thrust went down. That's how you get your targets. That's how you avoid, you know, I'm short here because how many traders do this? Good job, Randy. Great job. How many traders do this and you really feel good about yourself? Hey, I got the swing high, right? Number one, you get the swing high and you're feeling, hey, I know what I'm doing, right? And then you get out here. Hey, man, I got short at 86, 61. Forget it. They don't even get 61. They'll get 86 to 72, right? You ever do this? You go short here, and right away you got 14 points. And you go, all right, yeah, 14 points, baby. There you go. I'm a super trader. And then you see the market go down 100 points. And the pros are getting 100 points. The amateurs are getting 14 points. Why? Because the amateur said, I just need a profit. The professional goes, well, what did it go down before? Before they were taking profits. In other words, before it went down this much, they started taking profits, pushed it back up, got in again, and held for the same amount of swing down. Also, by the way, you can judge how big the counter swings are by what they went before. So, what are the counter trend? How much are the counter trend swings now? I mean, you could do a computer program, but you could do it visually. What do you think? How far do you think the counter trend moves are going to be? Who wants to take a guess? Counter trend moves. Who wants to take a guess? In number of ticks, I'm going to predict 48 ticks. So, how come? Because here to there is 48. From here to here was how many? Well, the low was 842. What was the high? 876. Not exactly 48 points, but it's better than not waiting at all or getting in too low. You'd wait for a retracement. These retracements here have been about that amount. So now you got a new low of 834. Why not wait 48 points for it to come up and then short it again? That's how they're doing it on a short-term basis. Now, how many of these will you get before there's no more retracement? Three. You usually get one, two, and maybe you get one more, and the game's over. Does everybody understand that? So the newbie goes, all right, you're saying it goes retracement. There's one, maybe there's two, there's three. All right, I'll do the next one. So it goes up and you go short and then it just keeps going up. And you go, whoa, what happened? Well, the market has made three swings down and you're going short at the bottom of the third swing. Kind of bad judgment, right? How many of you have done that? I guarantee you review your prior trades and see how many times you've done that. Review how many times you've had like three moves and you're going in after the third move and thinking now you're going to make a fortune. And you wonder, why does the market go against you? Because they know the game. Everybody knows this game. And that's why you get your target, you're done, go do something else. How do I avoid getting trapped? Anyone want to know my secret? How do I avoid getting trapped like that? Anyone want to know my secret? Good secret. All right. Lactic wants to know. Anyone else want to know? I'll just tell Lactic if nobody else wants to know. Okay. I start teaching you guys. Keeps me out of trouble. You see? I've got clients to teach now, so I couldn't care less about the market. But somebody else is like, I'm going to go short. Look at this. It broke S1. Oh, I'm going to make a lot of money. I don't do it because, well, now I'm busy teaching you guys. So by dumb luck, I missed the bad trade. You see, it's not dumb luck. My distraction is you guys. That's why people go, "Oh, sorry to bother you, coach, but I have a question." No, it's not a bother. I love questions because it stops me from trading like an idiot. Because if I didn't do this, I'd be doing the same thing you guys do. I overtrade. That's my nemesis. That is my weakness. I overtrade and lose money. Even now, if I sat here without you guys, I'd trade 20 times a day, and the last five trades would be losers. Why? Because I get overconfident. What stops me from being overconfident now is bragging to you guys how great I am. So it stops me from being overconfident in my own mind. Now it's time to tell everybody else how great I am. So it stops me from trading. See? Found a way to avoid being careless. Now, you're almost ready to get. Do you see this? By the way, this is called the parabolic. Everybody asks about that. It's almost ready to hit that for a buy signal, which means what? Maybe the lower lows might be over for a while. I think so. I think so. I'm guessing yes. That's why I got out and took my profit. Did I get out at the exact low? No. Will I ever get the exact low and the exact high every single day? Every single day? No. Have I ever done it, gotten the exact high? Remember, I've traded for 40 years. Anything can happen. There are, I would say, about 27 different occasions. I kept a record of it and I lost it, but it was about 27 days out of 40 years I have hit the exact high and exact to the tick low of the trading day. How about that? That's a great feeling. On the other hand, if that's what you're trying to accomplish, you're going to lose a lot of money trying to get the exact high and low, unless you got 40 years to play around with. 27 out of 40 years, not 27 out of 40 days. How many trading days? Think of it this way: there's 250 trading days a year, and only 27 of them. So forget that system. Get a better system. So what? Here's a good question that lactic acid just said. Have we finished the three cycles, the three down cycles? Yes. So if that is true, then we need a rally that's going to be higher than one of the last rallies. So you're going to now need more than a 48-point rally to go short. And if you think about it, look at the low of 27 to 80. So there's 60 points right there. Now, instead of this swing, this becomes less significant. There's your swing that you want to short against right here. Not this one, but this one. So you could short right here, but your stop is there. Too much risk. But if the market came up to here, does everybody see where it broke down before? Do you see this area of support that broke? 930. It had an M here, a first touch rule, and an M. Well, that's your resistance, right? Isn't this 930 resistance now? It was support. Now it's resistance, right? Why? Because anyone who bought at 930 thinking, oh, well, that's great, they're in trouble. So if it goes back to 930, they would be shorting it. So what do? Draw a line there to remind yourself if later on it comes up there, be prepared to possibly go short again. Any other questions before I go for my coffee? So 932. So we're talking about little less than 100 points. That's not that much. By the way, that was the 29 area that I should have stayed with. It went down another 100 points. But that's okay because I can make that money back waiting later on if it goes back up 100 points and say, ah, here's another trade. And I'll still get the 100 points. You see, you can always pick up the same amount by just following the market. Now, what if it goes above the 932 and then goes through 980? Then it's bullish. Just like yesterday. Remember? Yesterday was bearish and then it turned bullish, right? Are there any other questions? Well, for our illustrious YouTube channel admirers, here's my suggestion. We appreciate your admiring us and your subscription, but how about actually trading with us? Try trading with us, making some money. How about that? So take a 3-day free trial. This way we don't kick you out at 10 o'clock. This way you could be there all day and learn these things and start trading consistently for yourself. Don't listen to all the fake gurus out there telling you you can triple your money and double your money every day. You can't. If you get a portion of the market move, if you can get 40% of a daily range, you are an elite trader. Thank you very much for your attention.